television and tracking us on social media. Send us your questions for the secretaries. We're starting now. Use the hashtag CNBC-TV18 live and budget with CNBC-TV18. We will take your questions to the secretaries live here on the CNBC-TV18 budget verdict. Gentlemen, before I talk to you about the budget, Mr. Pandey, let me talk to you about what we've seen happen over the weekend right after the budget speech was delivered by the Finance Minister. President Trump going through with his threats of imposing tariffs on Canada, Mexico and China. The global markets volatile, in fact tumultuous to say the least at this point in time. Commodity markets, currency markets reacting to the comments that have come in from the US and the tariff war escalation. Mr. Pandey, how worried should India be? What would your top concerns be as you see the threats that are playing out today on the trade front?
I think we recognize that there are geopolitical headwinds, and I think that was also stated by Finance Minister in her speech. This geo-economic fragmentation has been going on for some time. And when President Trump, when he was campaigning, he had also indicated what he will do if he comes to power. And I think he has gone along with whatever he said. Now the question is that we recognize that if we have escalation of tariff wars, then certainly there will be an impact on global trade and also on global growth. So this is something which we have anticipated it will happen.
You've anticipated it will happen, but how prepared are we to take measures, appropriate measures, to either retaliate if they were to impose tariffs on India, or to be able to make good of the current trade war escalation between US, Mexico, China and Canada to start with? These of course threatened Europe as well at this point in time. And linked to this, the question on what we have seen as far as the customs duty streamlining is concerned, also the cut in CBUs, both two-wheelers and cars and many other products. Are we trying to dangle a carrot, so to speak, amidst this trade war, sir?
First of all, I think the FM was asked this question yesterday, and she replied, and that's been reported in the papers. We should not really anticipate something which is not really stated. The kind of thing which you say, you know, tariff against India. This has not been stated. I mean, if the US admin or anybody has not really stated, so why should we really be saying so? So that will be premature and not warranted, because you know these are different grounds on which the tariff is being put in. You know, maybe grounds on immigration, maybe with China on the old disputes regarding, you know, whether China is doing enough to do that and give market access to US. So far as we are concerned, we are a very open economy. If you really look at the US imports into India, most of them are into a very, you know, the tariffs are very low. They're in the range of, you know, up to 10%. They are in 2.5 category, they are 0 category, 0%, 5%, 7.5, 10. Incidentally, if you look at our industrial goods, out of 8,400 odd tariff lines, 6,000 tariff lines are already below 100, close to the ASEAN rates. And these are MFN rates which are equally applicable to US as well. So therefore, India is not protectionist and neither intends to be protectionist. And therefore, I would say that this is an apprehension which is probably not warranted. The second point you mentioned about, you know, the BCD rate rationalization. Well, if you really, you may please recall July 24 budget, in which Finance Minister had removed 7 rates.
Yes.
And she had stated very clearly, we will do a comprehensive review of tariff rate structure, and we will go line by line, and we will bring it a reformed structure in 6 months. And that is what has been delivered in this budget. What we have done is, we have looked at our tariff schedule, and we have found that on a large number of items, although our tariff schedule is having a number which is much higher. The applied tariffs are much below that. For the information of your viewers,
Yes.
I would like to say that there are three things. First, there is a tariff rate, which we call it a BC rate in the tariff schedule. In that schedule, you have different rates. Now that is the maximum rate where we can go, and they are authorized by Parliament.
Right.
And we take it to the budget and put those things in the schedule. But then we have a notification powers under which we apply the tariff rate, and we can go up to that rate. And that is what we call effective rate. And then of course there is what is called an import duty or effective incidence, where you add on the effective rate, which is an applied rate, you also add the cesses and the surcharge, whatever is applicable, and find out what is the total rate which will be applicable at the time of imports. So when we do that, when we are looking at the BCD rates in the schedule, they are different from applied rates. And when we have done that analysis, we have found that a lot of commodities we have had rates which are, actually applied rate is much, much lower. So what we have done is we have brought the rates and what we call it a tariffization. Right. We have brought it down, and 51 such tariff lines have been brought down to rates either 0 or 5 or 7.5 and so on, within that band of 0 to 100. The second thing what we have done is, we had some high rates, and they were just on very, very few items. Like 150 rates was just on one thing, that if you have a lab chemicals and you are using that as to reroute alcohol, which is in the agriculture side, right, into sort of misclassified route, then we had a punitive of 150 thing, and then we have brought down to 70. So we have now 25 rate has been removed, BCD rate in the schedule. 30 has been removed, 35 has been removed. We have also removed 100, 125. All of these things have been removed, and now we have only 170 rate for those which is 40% and above. And the other one, we have brought it down to 20%. So we have now rate at 0, and then we have 2.5, and then we have 5, and then we have 7.5, and then we have 10, and then we have 15, and then we have 20. And a high rate we have only one, which is 70. We don't have any more 150 rate. We don't have any more 125 rate. We don't have any more rate of 100. We do not have any more the rates of 25, 35. So this is a reform which we have done, which the exercise looking at 8,000 tariff lines. And certainly it is not a reactive situation.
No, it isn't. It isn't, and it was promised in the last budget, and an attempt was made to actually start the streamlined process in the last budget, which is carried forward this time around as well. Sir, if I could get a comment from you on where you see the currency today, new record low on account of, again, the trade war that is escalating at this point in time versus the US dollar, the impact and the implications, and how the finance ministry sees the rupee's movement from here on.
Well, I think, as I said there, this is a challenging time. And obviously, when you have a challenging time, when the markets are reacting over what might happen, I think the markets are looking at the risk to global trade and global growth. Obviously, to some extent, they will go for safe haven, like the capital moves pretty quickly between countries now. And so therefore, typically the people will look at safe haven and go to US. And some of the flows will actually move in. That's also happened in our stock markets, where FPIs have really parked themselves back there and anticipating what might happen. This also happens when the Fed actions are anticipated. Like, if you recall, there were also similar situations post-Ukraine crisis. There was also global inflationary pressures where Fed Reserve and several central banks, including RBI, hiked the rates. That time also we had these situations where capital was moving back and forth, especially safe havens. So it moves away from emerging markets into safe havens. And therefore, there will be a certain pressure on the currency. But this is something which the Reserve Bank of India, which is responsible for exchange rate management, and our management is rupee is on a free float. Rupee is on free float, so rupee is not really thing, but only we take care of, RBI takes care of macroeconomic stability and exchange rate stability to, stem any unwarranted volatility. But there are certain secular trends which are allowed to operate because that is how the system works.
No, fair enough, sir. I understand that the RBI will do what it needs to do or what it feels is appropriate as far as the currency market is concerned, and it is very clear that the RBI has decided not to intervene in the currency market at this point in time. But, from an import bill perspective, with the rupee now depreciating to almost 87.26, that was the last rate that I saw before I left the studio, the impact on the import bill specifically, sir?
There are a couple of, there are different moving parts into this. Now you have also, oil is one of our important, imports, and it is pretty inelastic. So if you have an elastic imports, they will actually adjust fairly easily. If you have inelastic imports like oil, we must have to import no matter what, at whatever price. Now there also, while, we have an exchange rate issue right now, that means rupee has depreciated. We have also a fairly good, prognosis, for the dollar rate for oil.
Okay.
Because oil is the way the US will produce more oil, and the way indications are that the oil prices will not really move up. So to that extent, at least the dollar price, we don't anticipate very high, upside. The second thing is that, you also have an impact on imports, exports. In exports also, to the extent of imported inputs, obviously the cost rises.
Yeah.
But some of those duties are actually given back because exports are exempt from duties. So therefore, there is a drawback where the duty paid are extra duties are paid, and then they are also refunded drawback. Then the ROTTAP and ROSTL, those are the duties which are not linked to the import duties but the other duties. Those schemes also do remain. And exports actually also, into the extent of value added in the country, they gain the competitiveness.
Right.
It is like actually government giving them money in terms of if the exchange rate depreciation does take place. So therefore exports get more competitive. So I think overall we have to really see there are many moving parts into it.
I understand. So let me put it simply, sir, before I bring our guests into the conversation as well as Mr. Chawla, that would the depreciating rupee be one of the top concerns for you today?
I think it's a concern in terms of more in terms of what's going to happen for the global trade and global growth. In the medium term, in the short term, that's more important. Because that is how, many of our trading takes place.
Yeah.
And India is a fairly open economy, so it's not really a closed economy of yonder years. It's really a very open economy. Imports and exports as a percentage of GDP is pretty high.
Right.
So therefore, we are impacted by global developments, and we are watching the situation.
We are watching the situation. Mr. Chawla, let me come to you now, sir. As far as the disinvestment roadmap is concerned, what has been budgeted is 47,000 crore rupees. It's fairly modest. But I think the larger question that people want to know is there a lack of appetite at this point in time to move aggressively on disinvestment? And we've seen this number shrinking over the last few years. Is that because you believe that it's hard to disinvest, or you believe that there is no appetite for disinvestment? If you can lay out the roadmap as far as the disinvestment roadmap is concerned and the thinking behind that number.
Thank you. I would like to first clarify that there is a composite strategy as far as public undertakings, public enterprises is concerned. The whole idea behind bringing the Department of Public Enterprises and DIPAM together was essentially to emphasize that corporate strategy and asset management go together, and that we should look at them in a composite way so that public enterprises play their rightful role in the economy. We, of course, we have clearly said so, that private sector must keep growing and it must occupy a greater share of the economy. But public sector, being publicly owned, has a responsibility. It must become competitive and it must share its wealth with the Aam Aadmi, with the common citizens, with the ordinary investors, who is investing increasingly his hard-earned money and his savings into these assets and deriving returns therefrom. And therefore, our strategy is calibrated. And as part of this value optimization and value creation strategy, we follow four, five different things. And the most important being that with corporate strategy and asset management coming together, we are very careful and about corporate performance. We have guiding parameters. We monitor the PSCs very carefully and advise corrective action wherever we think they're going off track. At the same time, as you know, CapEx just does not come from the budget alone. It comes from state governments, it comes from local governments, and it comes from PSUs.
Yeah.
And if you see, almost 4 lakh crores of capital investment comes from PSUs. And it is one of our jobs to monitor that and ensure it is on track. Thirdly, we have to ensure a consistent flow of dividend so that the wealth in the public sector is shared with everyone and dividends flow consistently to all stakeholders, particularly the minority shareholders. Last but not the least, we focus on the strategy is calibrated asset monetization. For example, if we did not list the LIC, would you know its market value is 6 lakh crores? And therefore, it is important that you move in steps which are careful, which are calibrated to market, which maintain market value, which are careful about investor appetites, and most important, take care of minority stakeholders.
You know, they're all good points, sir, but if I may ask you a direct question before I get the audience in, what is the IPO pipeline that we can realistically expect as far as PSU listings are concerned? You gave us the example of LIC. What are we talking about as far as FY26 is concerned?
I would not prejudge or communicate market-sensitive information, but what is in the pipeline is already known. It is moving along track, and we'll make the right announcements at the right time.
At the right time. So very quickly to the both of you, and this is a question that's come in since you were talking about dividend. Dividend receipts have increased by 12% in FY26. Even if the RBI gives 2 trillion rupees again, it suggests an over 40% growth in non-RBI dividends. How does this math add up? Finance Secretary, would you like to start? And then I'll come to Mr. Chawla.
Well, if you really look at the dividend, as Arunish mentioned, you know, we are looking at consistent dividend, not maximization of dividend. Because if you maximize the dividend, you basically evacuate the money out, and then it doesn't help for growth of the company. So there is a consistent dividend policy, and consistently also the targets of dividend are being met. Because there is a growth in profitability and there is a growth in overall, you know, in terms of absolute terms also the profitability increases. So if you really see the last few years, the CPSC, the dividends, they are always exceeding the targets. And this year the target is 69,000 crores, which will hopefully be met.
It will be met or bettered?
It will be met because it's a budget target.
Right.
Yes.
Mr. Chawla, you wanted to come in.
I just wanted to reinforce that point that dividends, the public sector dividends were almost 1.25 lakh crores the previous year. We are seeing a sustained near 15 to 20% growth year on year. You would expect them to pay out dividends of 1,40,000, 1,50,000 crores, and only say half of it will go to the government. The remaining half will be shared with the people of India.
Will be shared with the people of India. The people of India have questions.
The people of India mean the shareholders.
We got that, sir. We got that. Shareholders, taxpayers, we've got plenty of, perhaps both sitting here in the audience. Let me come across to you. If you could introduce yourself very briefly and ask your question, sir.
Hi, I'm Sandeep Bhalla. I'm from Dhruva Advisors, and there is one question which I have. Shereen spoke about, beneficial tax rate for new manufacturing units, and she spoke about how US is incentivizing corporate tax, reducing the corporate tax. Is there a thought process on why this was not extended in the current budget, or is there something which is we should be expecting soon?
So the expectation was that you'd bring back the concessional scheme, perhaps with 15% or 18%. The sun had set on it in 24, but you chose not to do that. Why not?
I think we don't want to create another scheme for that. We already have two. We don't want to create the third. I think that particular scheme of manufacturing companies was for a limited period it is a post-COVID issue when we wanted certain manufacturing to be quickly initiated. And that was initiated for only the companies which were incorporated fresh, which actually came into commercial production between that period. So it was for a particular purpose. Broadly, the corporate tax reform has already taken place in terms of, the reduction in corporate rates. If you see the new regime, the corporate rates have already been reduced. And it was reduced, in 23. And so therefore, the same system continues. Now, when you are, doing that corporate tax, you don't again create another subcategory of new manufacturing and old manufacturing. If you are manufacturing, you should be taxed the same way. Not that, you set up one plant and it will be taxed differently. And if you are in the old plant, that will be taxed separately. A company is taxed. So I think it was not really a very good way of complicating the scheme. We are for simplification. We want actually more and more new regime to come in. However, corporates are there in the old regime still. Some of the reasons are their own deductions which have been available to them, which are much larger. So slowly they are also coming over here. About 20% of the companies and 50% of revenue has already shifted to the new regime. And I hope that, this will be a gradual process. As far as the individuals are concerned, 75% people have also shifted to the new regime already. Yeah. And we hope that with the latest reforms in PIT, personal income tax, almost everyone will shift to the new regime.
Sir, a quick clarification from you. You talked about that concessional tax scheme, and when we saw the corporate tax reduction take place in 2019, the revenue foregone estimate that the government had put forward, what is the actual revenue foregone on the front of the corporate tax reduction that took place? Because there is some clarification required on that front, linked to the fact that you've budgeted 1 lakh crore rupees as the revenue foregone for personal income tax. The question is it likely to be much higher? Is this more conservative of an estimate that the government has put out?
Well, if you look at the receipt budget, we give a full statement of what is the revenue foregone and what for it is. So please refer to the receipt budget and you will know that if you have this deduction on account of that, how much is the revenue foregone. Coming to the PIT question, now 1 lakh crore is what we have said that we will actually not basically charge and then rebate it also, in some cases not charge. So 1 lakh crore is basically goes back to taxpayers.
Yes.
And obviously we have taken into account that while budgeting our revenue numbers.
So linked to that question is also the fact that are you concerned about the tax base erosion and the kind of pressure that this now puts on the even smaller tax base that you're going to have to work with? Yes, it's relief for a large population of the country and everyone is giving you 2 thumbs up for that. But as policymakers, are you concerned about the tax base erosion that this brings about?
We are not concerned because the point is that we have to collect the tax. We can't keep collecting taxes from this thing where we should not be collecting taxes. It is basically a public choice. It's a public choice. It's a political decision. It is a decision based on what income you are going to be taxing. So when you are saying we increase the tax base, number one, returns will have to be filed in any case. It's only up to 0 to 4 lakh category which is having a nil rate. They will be exempt not to file the returns. But anybody who is looking for rebate, the returns will have to be filed because then only TDS need to be refunded back. And we have a very good system where, the refunds can be pretty quick and, it's largely processed. For your information and information of your viewers, 99.7% returns today are self-assessed, both PIT and corporate put together. The onus is today, it is much like the new kind of governance, where most of the time, like earlier, you used to fill up a paper form and used to give on a window. And then the window will actually translate that paper form into its own system and make an entry, right? And most of the time, there will be some mistake in that data entry, and then you will be struggling to correct your name or this or that, because something which, is a process. That has totally undergone a change. Now, we are portal-based. You open a portal, you do that, and in income tax case, since the PAN number is there, the linkage is there, you don't have to even type your name. You simply get into the PAN, you go into your database, and you look at the AIS. And all in your AIS, you see all the transactions which is there. So we are able to, through a network of information, bring that information together for taxpayers, and it is like, producing a ledger for them. And it's such a good facility.
No, but I think the question that people are asking, and these are many questions that have come to me on this issue, is that instead of expanding the tax base, we're actually shrinking the tax base further. Your comments on that, sir?
Well, I would say that, certain number of taxpayers, say when we are saying that between 7 lakh, which was earlier not paying any tax, and between 7 and 12 lakhs, 1 crore more people will not have to pay any tax. So that part is there. But what we assume is that, okay, the incomes are also rising. The more number of people will graduate from which used to be earlier 12 lakhs and below into this category. And more people will be added, will also keep expanding the tax base. It is not good to really say that just because, you want a tax base, that you must tax the existing tax fellow again and again. You must bring newer tax people into the base, rather than trying to overtax the people who are already in.
Fair enough. Go ahead.
Good afternoon, sir. This is Vivek Gupta from Deloitte. First of all, I must commend you for an absolutely exciting budget. The concept of trust first, scrutinize later, I think stands very well with the taxpayers. There's one specific question that I'd like to ask you, though. There's been a lot of clamor around the fact that our tax law has a lot of provisions which call for artificial valuations. So, for example, when you're doing listed company transactions, depending on the date of signing and date of closing, there's some artificial valuation norms that are set out in the rules to the tax law, which actually are causing listed company transactions to become very difficult. We are all hoping that in the new tax bill that we see within a week, some of this will be addressed. Is the government also looking at reorienting the rules in order to simplify the multiplicity of these valuation norms, particularly when, sir, your own government has a tax law which, for the purpose of transfer pricing, for example, allows a fair value to be determined based on the facts and circumstances of the case. So there's a strong case to be made for these manifold valuation norms to go away from the rules in the Act. So if you have any comments on this in the context of introduction of the new tax bill.
Well, I think this is certainly a good question. I think the more complex things we make, the more difficult it is, the more interpretative it would become. So I think our efforts are really towards that, trying to simplify. Now, some of the elements of, like in the new law, new bill which we are bringing, some of these elements we have upfront addressed in this itself, rather than trying to really say that we'll just put it there and then, because it will take time, to be deliberated and get passed. So like TDS, TCS thing, we did some rationalization earlier, we did so many rationalization in this, budget itself. So that will be a continuous process of exchange. Even for example, arm's length pricing also, many people have a lot of suggestions on us. That means how soon we do it. What is the time we take to do the ALP? What is the capacity we have to really conclude them quickly? So therefore, just because, we have an ALP process, it doesn't mean, unless and until we make it efficient, unless and until make it, timely. So which means that we've got to be really doing the capacity building in our department to do the ALP commensurate with the demand.
Right.
And these are the issues, there's a capacity issues we must address. But all the simplification issues, I think, even if in the new bill, you will find that there are certain things which have been carried over. You will have every chance to give your suggestions, and also the standing committee would also be inviting suggestions from the public, and that those will also be examined.
Mr. Pandey, a lot of the tax experts who joined us on budget day say they might be out of a job if what you've promised of halving the tax code actually goes through. So can you give us a sneak peek of what we should expect, or what they should brace themselves for, sir?
Well, I do not know what is the outcome, because what we see will be simple. Whether it will be simple in your eyes or not, I think because it is the beauty lies in the eyes of the beholden, Now the whole thing is, we are making a very sincere attempt. This particular thing, in other sovereigns also, this has been attempted. Some people have taken years, 4 years, 5 years, to change the new law, to rewrite the law. We had some groundwork earlier in some committees which they did the work. But this piece of the work, bringing it, has been done in about 6 months. So obviously, while we will say that we have done a great job, we don't know. So we have to, the suspense is, the jury will still be out.
Yes, the jury is out, and we'll have to wait for you to actually bring the bill.
But what I can say is that the words will be halved, chapters will be halved, redundant provisions will go, there will be a lot of these things which are clubbing, they will come, speech will be direct, and probably what you call assessment tier or something may vanish. So what we are saying is like trying to say something very clearly, more directly, and that has been our, guiding principles. To what extent we have been able to actually work out, because it's a big team that works and there's so many people who work, and whether the whole guiding principles have been fully kept, I think we will be open to criticism also. But we are making a very sincere effort for reform.
Sir, I can tell you, I'm standing here in the middle of a room full of many experts, and many are tax experts. I could suddenly hear a sigh go out. I don't know what that indicates, but the minute you said chapters will be halved, words will be halved, I could hear the sighs increase here in the audience. But you had a question, sir. Go ahead.
So my question is, I must compliment the way this exercise has been carried out in this budget, despite the fact the new income tax bill is in the offing. And one of the important changes you have made is that you, in the tax deduction at source, so wherever you're feeling that nitty-gritties and you have tried that TCs has been removed, only TDS will be applicable. So my question is, when we are trying to simplify the tax laws, tax deduction at source provisions have been reduced at many places, not to collect taxes, but to have an audit trail. And I believe now a lot of audit trail is available under the GST. Because all goods and services are covered under the GST, and when you are filing your returns and documents, most of the information is available there. Is there any exercise on that whatever is being captured in the GST will be taken into consideration while drafting these provisions under the income tax, particularly on TDS and TCS, So there is no duplicity and no complexity. That same information is being served, is available in the government domain in GST, and the same is again being captured in the income tax.
Thank you, sir. Thank you so much. Go ahead, sir.
Well, that is a good question, and I think that is ideally we ought to be doing this. That means basically two different laws should be talking to each other in terms of also import. And I also agree with you, some of them were brought in because, we didn't have the GST, but in the GST that information is already built. I would say that although we have been trying to eliminate all those, but I can't guarantee that, some of it will not really pass on in the draft bill that will be there. But as I said, we will be really open to suggestions. And if we are finding out and the suggestion is that, this is not really required here, so we will eliminate it that also. Like, for example, here we have mentioned, there was a very big pain point. In the sale of goods beyond 50 lakhs, you had said TDS is, the law was all right. All what it said was, if TDS is not done, then the TCS will be applied. This iffy business is a very dangerous business because the point is, how, the TCS fellow, he is independent. The TDS fellow is different. He says, how do I know he has not done TDS? So then I will be caught and I will be penalized and there will be a, so let me also deduct. So therefore, if actually practically didn't work, so both started deducting. Now, our intent was only to track, I said, and we had only one person in mind, either or, but it became both. When it became both, then 1% plus 1%. So much of money will be blocked. We must realize the more money we block of business, the more uncompetitive we are making them to be because every money has a cost.
That's music to industry's ears, sir. Not so sure about the tax lot, but it's certainly music to industry's ears. But we have more questions for you. Go ahead, sir.
Good evening all. My name is Sudham. I am from Eastman Auto and Power Limited. We are manufacturers in the solar and the last mile mobility space. So first of all, thank you. Some of the announcements yesterday or day before rather were those that impact the industry positively. My question really was about the solar side of the things. Thank you again for the boost that the industry is seeing because of the initiatives the government has taken. The question really is that there is a significant power electronics side of the solar solution story. And there has been some anticipation in that regard from the industry. Has the government been thinking in these terms, particularly from the Make in India perspective, to help the solar manufacturers here in the power electronics side of the story?
I think that's a good question, and I can see sitting right in front MeitY secretary, who is one of the champions. So you say it, and he's there.
Absolutely.
So आपने कोई compact किया हुआ है.
That is the power of that's the power of CNBC-TV18. You ask and we deliver. May I have Mr. Krishnan join us on stage, sir? Ladies and gentlemen, a big round of applause to the MeitY secretary, Mr. S. Krishnan, who joins us on stage. I don't even have to ask you a question, so the question has already been delivered. So the mic is yours, sir.
No, I think the power electronics bit, as far as MeitY is concerned, is primarily on the semiconductor side, especially silicon carbide and those set of chips which need to be made. That is covered under the India Semiconductor Mission. And we are pushing to see that we have more capacity in the country to handle that. Likewise, there's a lot of research which we are doing alongside various ministries, including Ministry of Heavy Industry and also new and renewable energy sources, on ways in which power electronics can be applied in this particular space. We have a whole project called NAMPET, which is basically on power electronics, and we believe that this is an area of great growth in the country. And we need to stay focused on that area to make sure that we support power electronics through a variety of schemes in the ministry. Some of these will overlap with what is being done in MNRE and what is being done in MHI, but we will iron out those issues and go forward.
Mr. Krishnan, many thanks for that, sir. But if I may ask you, the big expectation was that there would be a new PLI scheme for components that would find its way in the budget. But we're given to understand that that consultation process is still underway and perhaps we will have to wait a little bit longer. Can you throw some light on that, sir? And also on the existing PLI scheme, in terms of disbursals, sir, there are some questions on the disbursals being slower than what was anticipated or what was expected. If you could clarify on both.
On the new scheme which relates to electronic components, there's a process that it has to go through in the government system. Just because it doesn't find a specific mention in the budget speech, it doesn't mean that it won't come up during the course of 2025-26. Sooner rather than later, I'm sure that the scheme will be underway. That's one part of it. And I don't think funding will be a problem. I think if you look at the budget numbers between 2023-24 to what it is in 2025-26, the budget has grown more than twice. It's more than 100% jump. So it's a huge jump from about 12,000 odd crores to 26,000 crores. So I think within that budget envelope, we should have no issue in supporting a new scheme also if when it actually comes up. On the disbursement side, the disbursement basically happens based on the claims which are filed by the companies. And on our side, we try to process them as quickly as possible. The disbursement is basically in two schemes, one on the two PLI schemes, both PLI on large-scale electronic manufacture, which is basically mobile phones, and on IT hardware. PLI on large-scale electronic manufacture, which is mobile phones, is still the best performing PLI amongst all, and disbursement is continuing quite strongly. PLI on IT hardware, really the disbursements should commence only during 2025-26. That's what we were expecting, because the first full year of production was really 24-25, and only when that production is completed will we have claims coming in and companies claiming incentives under that. And many large companies, or not many, but a couple of significant and large companies are coming into the scheme only with effect from 1st of April 2025. So real claims will accrue only during 25-26.
A quick question on the budget allocation for the India AI mission, Mr. Krishnan. I was just taking a look at that. It's gone up from 173 crores to 2,000 crores. While that's a jump of 1,000%, but when you look at the numbers that are being touted about in the US, Stargate, billions, hundreds of billions of dollars, the same story playing out as far as China is concerned. Do you believe that this is going to be enough?
I think we need to understand that when Mayoshi Son talks about $500 billion, he's not talking about government money.
Yeah.
He's talking about private money over a period of time which comes in. And I think same is the case in India. The investment is being made. Government is playing the role of a catalyst here. And the investments are really being made significantly in the private sector. There is some government investment, of course, without doubt, but significant amount of investments are in the private sector. What we are supporting under the India AI mission really, and the Minister had recently made that announcement of about 18,000 GPUs being available for use, and that part, the AI compute element having been launched. So those investments are actually happening. Those are private sector investments where government is basically providing demand support. It's almost like a voucher-based system. It's an ability for us to buy the compute facility, and which is going forward.
Just on a note, as a joke, I would say that we should not finance enough to, finance our own
demise,
extermination, human extermination.
So which is why you've been stingy in your budget for the AI mission, sir. It's self-preservation. But that's
humanity must preserve itself.
Absolutely, I couldn't agree with you more. Humanity must preserve itself. Shweta, go ahead.
Thank you so much. This question for Finance Secretary. I'm Shweta Rajpal Kohli. I represent the Startup Policy Forum. We're an industry forum that represents about 50 of India's largest startups. So one very long-standing demand of the startup industry has been around ESOP taxation. We all know the big concern, and especially considering the number of new age companies that will IPO, the taxation on ESOP triggers at the time of exercise rather than at the time of liquidity, and that causes a big pain point to many ESOP holders, thousands and thousands of them across the country. So I think that's been a pain point, and we're hoping it will get addressed in the next week when we're going to see some of those tax changes being announced. And also on share swap, similar problems. There is no liquidity, but there is a tax liability. Any thoughts on the government's thinking around it?
Well, I think in general, I think our ESOP taxation is as per the global best practices.
Okay. Sir, another question or more actually. I think again, it might be premature, but I'll ask nevertheless. The AGR dues for the telecom sector, a lot of reports suggest that the government is actively considering whether you could provide any further relief there on AGR dues. The matter will have to be, of course, cleared eventually by the Finance Ministry. Has it come to your table yet? Is it on your table? Are you looking at it, sir?
You will come to know when it comes.
So it hasn't come yet?
No, I mean, I think this has been under discussion, because unless and until it is decided, it's not decided. It has to be decided.
It has to be decided, but is it under active consideration today?
No, I think that much for today.
That much for today. Okay, I get my cue. But Mr. Chawla, let me come to you, sir. Because, one of the other aspects of this budget was that it has revived the idea of public-private partnerships, something that, 10 years ago, the government had talked about. I still remember very clearly the idea of Triple P India was put forward. Can you explain to us why you felt the need to bring back public-private partnership? How is this going to be operationalized? What do you believe will be the road forward as far as PPP is concerned, sir?
If you noticed, apart from what is being talked about as a value creation strategy in the public sector, the new asset monetization roadmap, 5 years, medium term, has also been announced and mentioned. And that essentially is to re-energize the fixed assets which are there in the government sector and allied government sector and government's agencies and authorities and like railways, highways and so on and so forth. And the idea is that through various models, including public-private partnerships, land lease arrangements, InvITs, REITs, and so on and so forth, we will be able to reactivate this ecosystem. Some good work has happened in the past 5 years that has given us encouragement. We hope to build on it and do better in the next 5 years.
Now, even as far as asset monetization is concerned, a target of 10 lakh crore rupees the government has put out in this budget on asset monetization. Again, for the benefit of everyone who's watching, could you elaborate on what we should now expect in terms of next steps and how fast and swiftly we're expected to move on that front?
Want to take that?
Okay. See, the asset monetization is two kinds. One, is basically asset recycling. You have a certain assets, you part with it, and basically you part with the cash streams and then use those things upfront payment to build up more assets, capex. So there are two kinds of agencies. One is the NHAI or railways, which is the government agencies, where the government money is involved, so the asset belongs to the government. In which case, when you do the asset monetization, certain receipts will come back to you. Just to give you an example, if you have an NHAI and you have a road, you keep on building roads and then you have a certain cash streams which are settled. Then you have a TOT and then you put it out a bid and you say, okay, I write a concession for a certain period and then you take the thing and you give me upfront payment. This money I will then use to do that, to build up more roads. Now, there is a certain level of asset monetization which is done by the companies themselves, which is the public sector. They are also counted in the asset monetization plan because they are done by the CPSEs. Now, there it is the money actually belongs to that CPSE. It doesn't come back to the government, but it is again the same thing. For example, if the power grid if they were to have a transmission line where a stable revenues are coming, they were supposed to put that particular asset into an InvIT and let that InvIT be bid out and invite certain unit holders where, pension funds and others will also come and invest. That money the power grid can use to build up more transmission lines without debt. But in those situations, they have to consider their shareholders' interests, the way they will like to do the asset monetization. Put together, the asset monetization is basically recycling of your assets in order to build more assets, and several things like NHAI, railways, and the NHAI is the most active in this area, and then you have others also. Arguably, you can do it even in FCI. You can have some land and all. Incidentally, this also includes the public-private partnership, because that is one way of writing concessions, which means inviting the people to invest the private sector money, and you write a concession if you have land or a concession and all that. In case of ports, for example, it is very easy to do that. Like if you have a landlord port, like JNPT, they are building up new terminals, etc., with the help of PPPs. They bid out, and then they say that one new, without their own investments, since they give you a waterfront, since they give you the access, they are able to bid out and based on a certain revenue share, get that particular thing built. This is also one category of asset monetization.
Okay. On land banks specifically, sir, we're again given to understand that companies like N18L, etc., that have a large land bank, will those be up for asset monetization, Mr. Krishnan? If you'd like to take that, and you as well, Mr. Pandey.
No, I think that will be taken by Arunish.
Go ahead, Mr. Chawla.
Thank you. We have set up a land monetization corporation, and it is essentially a service that we provide to all the public undertakings, because it enables a third-party independent valuation of assets and what is realistically expected, and that itself, is a big step forward. We are going to help MTNL and BSNL in monetizing whatever assets they have, so that the value that is locked in can be redeployed, the liability is cleared, and we can re-energize the sector.
And do you expect that to go through within this in the next financial year, FY26?
Touch wood.
Touch wood. Okay, that's an important headline coming in there. Go ahead, sir.
Thank you. My question is for the Finance Secretary.
Introduce yourself.
Yeah, my name is Rohinton Sidhwa. I'm from Deloitte. Sir, we've had this ups and downs on the global consensus with regard to the two-pillar solution for taxing MNCs around the world. And I mean, last year we withdrew the equalization levy on the presumption that there would be some consensus coming on Pillar 1. Pillar 1 doesn't seem to be headed anywhere. Similarly on Pillar 2, where unless we actually enact the law, we will not be able to collect any information for all the MNEs who operate in India. So any guidance on this? Why is there so much silence from the government with this particular part of it?
There is no silence. Nobody asked us.
Now you're being asked, sir.
No, I mean, see the BEPS 1 and BEPS 2. The BEPS 1 was widely, sort of accepted. BEPS 2, the Pillar 1, Pillar 2, there was a statement that, but India had some reservations on a few points. While we broadly agreed with certain principles, there was something on, the amount of compensation and how that compensation will get worked out. Now, given that, now I think the events have really overtaken. Now, the jurisdictions which have actually done the amendments of their laws, they may have to think whether it will be worth doing it. Because the US has said that we are not into it now.
Yeah.
So, I mean, all our big tech companies and others, where we had these issues where, the profits, where were the profits going? Now, if US does not agree to it, then how do we really operate it?
Yeah.
So I think we are watching, but my sense is that unless and until this multilateral framework also include, earlier US was in, but now they have said that they are withdrawing.
Right.
So therefore we have to wait and watch and see how it will be actually implementable. We have not actually taken up any taxation measures along those lines, but some other countries have.
Right.
And they will have to in fact review is whether it will be worth doing it.
Well, fair point. Mr. Krishnan, we've got plenty of questions here, but let me bung in a question here as far as the US itself is concerned and the escalation of the trade war, and specifically as far as the IT and electronic sector is concerned. Sir, how do you see this? Do you see this as a possible advantage for India? Do you see this as opening up further space for India? Or are you worried about the kind of volatility that this opens up as far as global trade is concerned? How do you look at it from your sector's perspective?
I think it's right now a wait and watch perspective. I mean, on the one hand, straight away you could say that it might be advantageous to us because tariffs may come down more heavily on other trade rivals, so there could be that issue. But if you look at it from another perspective, you could have a scenario where if the sourcing is from the same country, then will you have a problem in further exports? So we are not yet clear as to how this will play out, and we need to be prepared for all scenarios. I think there is reason for hope, and I think there is reason to assume that electronics as an export from India, which has suddenly become very big in especially what we send out to the US, we need to sort of ensure that we build the domestic value chain more significantly and increase domestic value add so that we protect ourselves against any possible pushback on the value addition point of what happens in India. That's the way we insulate ourselves in the electronic sector.
Hi, I'm Vineet Agarwal from Transport Corporation of India Limited. I want to go back to that asset recycling, asset monetization plan. In the last 6 years, the cost of tolls on highways has gone up on a journey cost from 5 to 7% to 15 to 20% of a journey cost. Now my suggestion here is that let's not look at blindly recycling every single road asset that we have, because it is going to lead to some cost increases. On one hand, we are talking about reducing logistics costs in the country. I can guarantee you this is actually increasing logistics costs in the country as we speak. So please look at it in a little bit more holistic manner. I know the new roads will get tolled, but let's not keep recycling all the old roads with toll one after the other. Thank you.
No, but the tolls are really not, they can't really have, it's not a free pass, you know, for increasing toll rates. Irrespective, the toll rates remain the same. No, number of tolls is also cannot be increased. The policy on tolls is very clear. Between one toll to another, there has to be a minimum distance. Whether this remains with the NHAI or whether it goes away out, to some other player, it doesn't make a difference. So what you are essentially suggesting is that NHAI itself should relax the policy, where it should, you know, charge less tolls and also maybe increase the length of the roads on which. But this is some point which we have to really see that, you know, when you have to maintain infrastructure of a very high order, I believe that if you don't do that, then you will end up in getting, you know, the poorer infrastructure and poor maintenance. That is also will not really be there. We have to take a very measured call on that.
Mr. Chawla?
Yes, I would supplement that. It's like the trade-off between a partial equilibrium effect and a general equilibrium effect. There was a time when in the PPP models we just had a simple BOT and annuities, but now we have a repertoire of different frameworks that have stabilized in the highway sector. And as very rightly you said, the TOT models, the toll operate and transfer models, have really taken off, and they are helping us, you know, maintain our highways in good shape, and helping us redeploy both budgetary and extra budgetary resources into more areas, creating a greater network, which is a huge positive externality. So I would say in the long run, and if you see everything together in the economy, the logistics costs will come down.
Sir, this is Sukhjit Pasricha. I represent people side in the aviation sector. I work as HR head for Indigo. So my question to you, sir, is I'm very happy to see, in the budget that government has identified the development of 50 destinations for tourism. Please throw some light on larger vision to develop people and customer-centric skills that these goals are met.
Well, I think this is a very important part, of Honorable Prime Minister's vision, trying to, look at tourism in a different way and also involve states. In fact, there is some indication in the budget speech which Honorable Finance Minister delivered, is that, we have to involve states into doing several things because ultimately tourism places are grounded there. Of course, there are many other network issues. One is the network itself, the airline industry. The second is the hotel industry, and it's also been announced that for the purpose of those destinations, there will be also, the hotel industries will be, in specific destinations, hotel industries will get infrastructure status in respect of those places. So that will also help them finance. It's been one of the very important and long-standing demand of hotel industry to be treated as infrastructure, just in case they can be facilitated for financing. So this is one focused approach that, how do we develop this thing. And then, of course, the states have to come in partnership. Then there will be also the central partnership so far as the monuments are concerned, because there is a lot of things which are dealt with the monuments in and around area. I think we have to really develop new sites, new things where, tourism can also flow in. And attendantly, we will have all those growth engines. These destinations will have the growth engines. But
Chawla,
the details will be, released by the Ministry of Tourism in due course.
You wanted to come in, sir?
Yeah, with my experience in culture, I would just like to respond to that. The idea is to go by what is called the tourist footfalls. The tourists, the sites, the monuments, as well as the cultural economy that exists around it. This needs to be brought together and in a way that all kinds of cultural products, cultural goods and the creative economy that is linked to it gets linked to the tourist and their footfalls and their visits and their circuits. So that is the idea. The 50 destinations would be selected on that basis. An integrated whole of the government approach would be adopted so that all agencies concerned, including clearances from the regulatory and protective agencies that I am talking about, that comes together. And as Finance Secretary said, the tourist hotels and the facilities will be given the status of infrastructure so that we can realize the potential of our cultural creative economy.
Sir, I had one question. This is Mehul Beda here from Dhruva Advisors. Sir, there was this change in the mergers and acquisitions part where earlier when there was a merger of an industrial undertaking, there was a fresh lease of life given for 8 years, and which has now been changed to say that only it will be applicable for the original year. Sir, we always thought that the thought process was that these provisions where losses can be carried forward or again for 8 years was more as a measure for revival of the loss-making companies. But now the government seems to have rethought on this. Anything on that, sir? That was one. And secondly, sir, there was a mention by the finance minister in a speech that mergers will be fast-tracked, and maybe the thinking here was that NCLT has quite a bit of bottlenecks, and there was something where the fast-track merger scope will be increased. So, sir, any details on that? Thank you.
I think you're referring to 72A. See, the point is that the intent has been, that you carry forward. So you merge, the two people are coming together. Then also you can demerge. Again, in the reverse process will happen when new cases of demerge. So, I mean, it can't be really taken up very opportunistically. I mean, you are trying to bring, merger is your decision of bringing together and all that. Carry forward of losses, whatever the original intent is, that you carry forward for a certain number of years, that intent will be carried forward. So if there is some ambiguity in the law where some players think that actually they can get, start from the scratch and take another 8 years, that was never the intent. So the intent has been made clear, but it has been prospectively, not retrospectively. So if suppose that provision, we have been very careful in trying to do that, so that actually we should not be accused of really, like if it was subject to misinterpretation, then at least clarify going forward that from henceforward you will have that sort of.
That's right. But I know, Mr. Krishnan, we have to let each one of you go, but let me start by getting closing comments from you. To start with, sir, we understand that Sam Altman is going to be paying you a visit sometime tomorrow or this week. What is that about, sir? What do you hope to discuss with him?
I don't think he's paying me a visit. He is expected to visit New Delhi, and he is expected to meet hopefully the Prime Minister or the Minister for Electronics. We presume it is to discuss on, what OpenAI can do for India and the kind of applications of OpenAI in the country, and how well India is equipped and what we can do to benefit from this. This we expect would be the areas of discussion, and this is what we would do.
Is there room for a potential partnership? The Minister has talked about a foundational model in the next 10 months. Is there room for a potential partnership or any kind of exploratory conversation with OpenAI on India and OpenAI working together?
See, I won't rule out any of that, but then the whole point is that OpenAI's model is not an open model.
Yes.
Right? So the ChatGPT is not an open model. So if at all we are going to build on models, it has to be on other open source models which we pick up and work towards. Already, as you are aware, we have put out the request for proposals for building India's own foundational models. We are expecting a number of responses, and many of those, and interestingly, I think what DeepSeek has shown us is that you can actually take a hybrid approach to this, that you can use an existing open source model, build certain parts of it, and then add other elements to make it even more effective. Of course, experts do give us certain cautions, because you really don't know what kind of data the original model has been trained on. So probably you'll have to do some more additional training to make sure that all the biases and prejudices which you fear the original model had are at least to some extent removed. But definitely the opportunity of building on something which has already been built helps us go a little further, and I think that is not something we are ruling out at all.
Not ruling that out at all. I mean, countries like Italy at this point in time have moved forward with a ban, but you're saying that India is not just open to working on DeepSeek, but it is open to hosting DeepSeek on its own servers.
See, our understanding on this is fairly clear. If you use DeepSeek as an app or as their portal, then the likelihood of your data actually going to where their portal, where their servers are is very, very possible. But it is again an open model, so you could actually pick it up and host it on a server here in India, and if it gets hosted on a server here in India, then the data doesn't go away to other places. Of course, there are risks in terms of, again, you don't know the precise data on which the model was originally trained on. There could be certain issues there, but at least you know that your data is safe and it's not going out of the country. So that is an option which we can explore. There's no reason why it can't be explored.
No reason why it can't be explored. So many questions coming in. Once again, Mr. Pandey, I'll come to you on that. On the tax math, sir, and how confident do you feel about the fact that you're going to be able to get this 14% growth on income tax with the cut as far as personal income tax is concerned, and even on things like the securities transaction tax, now that the curbs have come in on the F&O side, a 40% increase, are you being optimistic on that front, sir?
I think if you really look at last 3 years, we have been growing at 20% on PIT side, which of course includes the STT. But one thing I would also like to tell, in the present data situation, we have actually the firms and BOPs, body of individuals and body of persons included in the data of PIT data. And going forward, I think we will like to really bring an accounting information separately for firms, because the firms are really taxed differently, and they are more akin to, to be put along with the corporates. And this information is currently not available because of the accounting thing we have. And going forward from 1st of April, we can bring a system where going forward this information on firms separately would be available, which will be then bifurcated from the individual's data. That will be a very good point, because right now, a lot of things which we are ascribing to individuals are actually also relates to firms. But be that as it may, we have this 20% growth, and therefore, but we have assumed 14% going forward, so we have moderated it. And if you look at from the buoyancy side as well, the buoyancy used to be 2 plus, 2.5, 2, and we have assumed a buoyancy of 1.4 in this budget for the PIT. So therefore, we have taken on board that we are giving away this money. In fact, as I said, taxpayers are partners. We are partnering because we want this money to come back to us. Either you save, or you invest, or you consume. Either way, we are happy.
Either way, you're happy.
The decision making is transferred on this money from the government to the taxpayers.
To the taxpayers. Sir, a quick follow-up question. Again, this is a question that's just come in. The 8th Pay Commission, sir, that has also been set up. Any provisions on that account? Any thinking on the provisions that you will need to make on that account?
Well, that will be from 1st of April 2026. But normally, the report will come sometimes later. So I think the impact of, pay commission will be in the next financial year.
Next financial year. Sir, another quick question, and then I will take final comments from you.
Good evening. I am Abhishek Rastogi. I am tax and constitutional expert and founder of Rastogi Chambers. So my question is this, that when we go to the courts and we settle the issue in the Supreme Court, then in the budget we get to know that there are retrospective amendments. So these retrospective amendments must happen in the rarest of rare cases. I think the endeavor of the government has always been to reduce litigation. If first round of litigation has happened and concluded, then sir, what is the need of such retrospective amendments when Supreme Court has already concluded on certain issues? So this was my first question. My second question is that most of the times in the budget is completely focusing only on the middle class. What about the rich? The wealth drain may happen, and there are surcharges which are imposed for incomes above 50 lakhs, 1 crore, 2 lakhs, and so on and so forth. We have seen with our experience that a lot of these people who are earning in high income group category are actually not motivated. They say that, 40%, approximately 39.37 or 42%, if the surcharge is at 37, would be taxed. So effectively, when they end up paying advance tax, more than a month's income, 40 days, 50 days income is going for a quarter in the advance tax payment. So sir, at some stage, and at any stage, they are in any case paying tax on a higher base, because for them the base is high. So sir, I think the surcharge must be looked into. I mean, I don't know, what are your views about it?
That sounds like an impassioned plea, Mr. Pandey.
I think when a tax advisor, a professional tax advisor of many years is discussing with the revenue secretary who joined on 9th of this month, and he is asking me a very, very intricate tax question, God must have felt, okay, with this poor fellow, how will he reply? So he sent 2 Devdoots, Ravi Agarwal and Sanjay, both of them have come, Chairman CBTT and Chairman CBIC, so that, more proper explanation can be given. So that's what, I will just attempt as a very humble journalist, bureaucrat, civil servant. I would say, the rarest of rare this is, some cases are rarest of the rare. The case you are mentioning is, it has never been the intent. I mean, first, this is not an autonomous decision of the central government. This has been passed by GST Council, and the GST Council has, you're referring to that decision only, no? So GST Council has already done it, deliberated. So this, we are now carrying out only an amendment because the GST Council has cleared it. All the states will have to do it. But what is the rationale for this? I mean, you have plant machinery, mentioned at n number of places. Intent of legislature was very clear. And some with quirk of typo, somewhere at one place or became and. And now, you have the tax advisors, they have a gala time. Oh, you can save, the ITC will be admissible to you when ITC is not denied, And so therefore you carry on, and this is technical matter. See, intent was not there. If intent were there, many people would have taken it. How many people have taken it? Tell me, how many people would have taken it?
We'll have to take this offline.
So it's a class action thing then.
Well, let me just say.
So I would say that I think that particular error has been corrected. GST Council has taken it, and this government does not believe in retrospective amendments. We have made it very clear. The very first question on 72A I answered. Yeah. We were very careful that we should not get into any situation where the people who have availed it and because we also found that the law was actually ambiguous there. But in this case, the ambiguity was not there actually. The ambiguity was just at one place, this RM. But in many places, this is not there. Of course, much more details will be explained to you by Sanjay, who has appeared at the right time.
Clearly, the CBIC
and on surcharges, I would say we have not increased any surcharge in this budget.
Yeah. So let me end by asking each one of you, and I'll start with you, Mr. Krishnan, the headline that you will leave us with at the end of Budget 2025 and the impact that you hope it will have on the economy.
I think the key thing in the budget is there's an emphasis on promoting manufacturing, and electronics ends up being one of the largest manufacturing sectors as part of the overall manufacturing sector. And what has been done in terms of easing up the manufacturing process, particularly on the taxation side, has been tremendous work. Both the chairman of CBIC and CBDT are present here. So, I mean, the Department of Revenue and both of them have been extremely accommodating on the series of issues and demands that we have come up with on the manufacturing side for the electronics sector. And I think that gets a bit lost in the fine print. But the industry, I know for a fact, is fairly happy and very elated. And I'm sure that now the ball is really in the industry's court to actually lift the manufacturing game in the electronic sector in India in 25-26.
Well, the baton moves now to industry to do more. Mr. Chawla, the headline for you, sir?
I would repeat what Finance Minister said yesterday. It's a budget by the people, for the people. The government has heard the voice of the people. It has responded to that. It's a budget which provides a balanced support to growth with sensitivity and inclusion.
With sensitivity and inclusion. Mr. Pandey, I'm going to give you the final word, and I have to say, sir, you're on fire today. I haven't seen you respond as you have in many, many years that we've had you here on CNBC-TV18. It's been an absolute joy to watch you, sir. So the headline that you're going to leave us with.
Well, this budget supports growth with fiscal consolidation, with kindness towards taxpayers.
With kindness towards taxpayers. Thank you very much for your generosity, gentlemen. Appreciate you joining us here on the CNBC-TV18 Budget Verdict. Ladies and gentlemen, a big round of applause for the secretaries for joining us here and taking our questions. Appreciate your time. Don't go anywhere. We'll be back with the Economic Affairs Secretary, Mr. Ajay Seth, the Chairman of the CBIC and the Chairman of the CBDT, both here with us, and the DFS Secretary, Mr. Nagaraju, join us on the budget verdict. We'll take a quick break and be right back with you. Keep those questions coming in. We're live and back in a minute.